Thank you, Ankita, for kind words. Thank you for this background. Uh, Thank you. Let me share my screen. I prepared some kind of a slides. But hello, everyone. Looking forward for a interactive discussion for next 60, 80 minutes, whatever we are going to discuss. Whatever I'm going to share with everyone, the views would be of my own. It does not represent from any part from my organization, PWC. So it would be personal experience based only. Can you please confirm if everyone is able to see my screen and I'm audible?
Yes, sir, you're audible. Your screen is visible.
Thank you. Thank you. I guess you already did, Ankita, the part. Let me just add a couple of bits, and maybe I would like to have share one funny incident, maybe one of the tactical incident when I was a data engineer around 7, 8 years as well. Uh, see, I was working for one of the engineering, one of the IT services company for a client, and I was a part of a team practically where we were doing the data management and analytics for the client. It was a banking client, and there was a group of data engineers, group of banking data domain experts, PMOs, testers, database administrators, and very important data science team, right? The intelligence of the team, they were there. And I remember one incident where the few team member came to my desk and asking me. I was working on the same project for last 2 years, so I was having kind of a knowledge there from the application and data side. And they started asking questions saying what kind of customer data we have in the database, what attributes do we have, what tables do we have, what kind of history data we have. And then I was answering all the questions. And then when everything ended, one of the members stood up and said, Samir, anything more? And then when I said any particular thing you are looking for, the answer came as no. They said, I'm just exploring on what all data you have. Once we have it, we'll explore. Right? That's one way to go about it. Maybe 8, 10 years when I was there at the different side when I was a data engineer, uh, I found it odd saying why if the requirements are not clear, let's go to business and talk. Why are we just running and dark? Right? But then that's where the scenario practically I get every day, being other side of the world as well, where I work for multiple clients. So that was about it. On of course, so certain certifications when I was a data engineering employee. IBM entire InfoSpace suite, data stage, information analyzer, metadata workbench. I'm a PMI holder from 2013 onwards. And since last, I think 5 years, I'm exposed to cloud as well. So even got interested to complete the certifications on Azure, AI, data fundamentals, Azure fundamentals, even AWS. That way, being a consultant, you don't get to stick to one technology, right? And on a personal front, I enjoy food, both cooking and eating, shopping, traveling. I am a fitness lover, and I stay with my family in Mumbai. Right? For the topic, uh, as I mentioned, business specific data science use cases in financial services. I might talk about more of a specific subsector as well within FS. But then I thought, let me divide into these four parts, saying the way I look at business analytics and its usage and types of algorithm we use. Definitely, I'm not here to uh, explain you the algorithm types. You would be knowing better than me. But then, what are those use cases we talk day in day out with business stakeholders, and then to identify the actions out of it. If time permits, number three, I'll talk more about marketing. I have a point of view or maybe detailed action saying what do we do to increase customer value now in the next normal world as definitely 2.5 years have gone. But then how do we improvise customer value extraction and effective marketing? And then some new trends what I see in the market. I would be happy to even hear your thoughts, any learnings from your side, so that will be it will be enriching session for everyone. Right? Uh, Before going further in this, anyone in the audience, do you think any specific point to be called out I need to cover? Because I have some thoughts in my mind saying what I need to cover, but then I would be happy to understand what audience is interested to hear so that I can curate my discussion so far.
I think, Samir, once you finish your session, or maybe in between, as the session progresses, perhaps we can really bounce off questions to you.
Perfect. That sounds good.
All right. So
Okay.
the topic seems perfect. Your agenda is absolutely fabulous.
Good. Thank you. Okay, it's 5:09. Okay, now, so I was talking to one of my peer and my partner as well, saying we keep saying this AI ML, we keep saying this data and automation, and if we just look into the future, does AI will be there, ML will be there, definitely there, but then can we put some kind of a number or see the value potential out of it? Maybe yes. That's where see I came across this one of the report from PWC. There's a link in the bottom as well saying sizing the price of the analytics. And what it means is why every business in every sector identify and say I want to use AI to get action-oriented items. It could the potential value the AI can infuse to the global economy around 15.7 trillion dollars by 2030. Right? Now that's one of the sizing. Of course, the report might have detailed. I don't want to go into that, but then some kind of mathematical solutions would be applied, algorithms to arrive at this number. Now that's where the number we have. And now, if you look at from the AI ML perspective, the artificial intelligence, of course, a large umbrella, and then there will be multiple things in within it. ML is just part of the AI. The way I look at is the usage by it would be a autopilot mode and a co-pilot mode. Now, why I say this is, of course, there are more lenses or colors to it as well. Now, autopilot mode is where lots of manual tasks, repeating tasks, maybe a mundane Excel works that can be automated by standard offerings we have from robotic process automations or intelligent automation as well. And there are standard tools available in the market, Blue Prism, Automation Anywhere, UiPath. So this can be taken care, and it can go into the automation of the work. That's number one priority as well from the business. But when the human and machine works together, that's where it runs into co-pilot mode. And if you go deep on the co-pilot mode, there can be assisted intelligence, there can be augmented intelligence, and there can be autonomous intelligence, saying I am matured enough to take my own decision, and the machine will be autonomous, right? While there are all three buckets, I'll just put into the co-pilot mode. And this reminds me in one of the study I was reading in Forbes. That was the in the US region for healthcare industry. Now there was a situation where they were detecting the breast cancer. All the doctors and pathologists, the human study, their accuracy rate was 96% by detecting the diagnosis of breast cancer. And when they applied the same learning from the machine learning, they got it 92%. Now, close enough, right? ML 92, human 96. But then there was another study by Harvard. They combined the pathologist study from the human and the scan images of the machine they identified. They combined it, and the outcome of that combined study that resulted in 99.5 accuracy. Now, if you take this example of a technical numbers into a practical life, where I was getting 96% of accuracy on 1,000 cases, I was missing around 40 cases to identify. And with 99.5, with the augmented intelligence, or I would say a co-pilot mode, I was able to detect more, and I was just missing 5,000. Now, that's the beauty of co-pilot mode of human working with machine, or machine adding up human decisions, right? And definitely solution can be custom. It might not be defined. The standard offering might be there after a maturity, but then that can be kind of a co-pilot mode. Let's look at detail in Copilot mode. Now, when we look at in Copilot mode, right, there are some considerations to be taken place. And here are three questions I would ask myself. And what kind of data? I give example of data to be used. Once I have a data in place, I understand the environment. What kind of algorithms do I need to use or should I be using? And then what is the return on investment? Because everything what we are doing in the backend, in the data, in the information, from curating from raw data to information to insights, it has to benefit someone. It has to at least save XYZ number of hours or some kind of activating the mind to take good decision, without which they'll not be able to benefit. And now that's a lens we have to apply while in building the model. Now let's look at one by one. Right? Now, what kind of data? Definitely, it depends on the objective what you are referring to. Not every time we need to have data, but then all the features to be taken into consideration, not in silo or not in the legacy method. For example, a churn analytics needs to be done for a customer, for any industry, any sector, any client. You don't need to only go about the past data what you have it, but then the credit history data, the spend behavior, the number of products or services the customer is having, and even the external data from the fintechs what I will be able to get to enrich my knowledge about the customer, saying why churn analytics. Same thing if you want to do with the mobile and website experience, the behavior data is very important. So as per the need of the objective, the data need would be different, and then you need to make sure that you don't rely only on the internal data which is available with the firm, but then there are data available either free or paid, which can enrich your insights, which can be useful for alternate credit decision and many more. Now let's say what the data is sorted, the data is there, but then really how good the data quality is. Is the data quality in the same granular fashion what my model needs, what I need to have dimensions to? The model I would build might be on a learning data, test data, what we call, but then will it be the same volume what I'm going to hit on the volume production? Might be, might not be not. And then end of the day, what will happen is my highly trained model fails in the production by having more false positives. So the idea is this unknown scenario. How do I convert into now known? That would be the idea of objective, to choose one or maybe combination of algorithms to be used. And then when you use labels, now insufficient label again can have half of the learning for the model. I think the recommendation here would be to go small, a small scale light model, go into production with known risk, saying these areas are not covered, run the model on the live data, and learn from it. You progress the model, reinforce it, and that's a way the model will improvise accuracy. It will never hit the accuracy on day one. So that's the learning. That should be the way forward. And the actual point is, once you do everything, work with business, because we keep working on this by the method. We'll be saying I've improved this much efficacy, this much accuracy, my coefficients are good, my false positives, my fusion metrics is very good, my outcomes are good. But then you know what? When you talk to business, somebody in credit card, somebody in banking or a product head or a claim department, they will have a different questions to ask. They'll say my this particular segment is missing, my pay customers are missing, my outcome is not coming on time, you are giving me outcome at 2 p.m, I wanted in the morning, now what should I do? And some of the customers dropped by XYZ filter, and then you go back to the RCA, identify what are the reasons of you end up in saying data quality issues. But then the question is, are we thinking the same where business users who are going to take decisions or benefit out of this while preparing a model? Now, all these three has to combine, which can answer saying, let's see how to make AI more useful. Now, with that, if I talk about machine learning types to be used, Of course, I'll not go into detail, supervised, unsupervised, reinforcement. I'm sure this knowledge is sufficient with the audience. But then if you really see, right, the supervise you would use while you have at least you can label the data and you can prepare it and you can test and learn it. At least learning is very important, but the labels are important. Otherwise, you don't have a knowledge about data. And that's when unsupervised model will be required, where we can just start from day zero. No learning required, no target defined, just identifying patterns. Once you do both the things, definitely there would be from the feedback, I need to do a trial and error, the method I talked about. That's what you do. And then that's what the reinforcement means. Now, if you practically ask me, the way we use it is basically unsupervised first, then the supervised, and then the reinforcement. Because not every time you have labeled data available. So sometimes I even use unsupervised to do the supervised journey as well. That would be the good way to identify the objectives and the outcome so that we have some kind of a business story to mention. Let me give one kind of example on supervise. Now I was working for one of the use case for a marketing team is NPS analytics, Net Promoter Score analytics. Now, if you really want to do the NPS analytics, now NPS has two questions for a customer to ask, saying whatever service or product they just used or in the past, latest recently, there will be a question asked saying, from this experience, would you refer or promote this product or service to a client or a colleague or a friend? And then there's a radio button from 0 to 10. While 0 is not applicable, he or she won't do anything. 1 to 6, if you give it to some kind of a detractors, they are not happy. 7 to 8 are neutral, sometimes happy, sometimes sad. And 9 and 10 are the promoters. Once you do that, there will be second question with the open free text comes saying, what is the reason to give that score? Now, when you say NPS analytics, this see by just looking at the score would not be important. The important business intelligence to be brought up is, let's say one of the customer is giving a score 8, he is a promoter. But then when I look at the demographics to mix the insights, he's just tenure in the bank just 2 years. Maybe he's a Gen Z, yeah, pretty much young customer. He's happy with the services from last 2 years, having 2 banking products with them, with him, and so far he's happy. I look at the second feedback, which is 6 or actually 5 from a customer who is banking with the banking from last 20 years. And she has almost 6 products in the bank. That way, now, will I be able to give importance to a 9 or a 5? I need to understand whether, then I need to dig more. And that's where I go to the text. Let me do a text mining. I mean, of course, I think 2013 was the time when I wrote my first logistic regression in Python. And we identified this entire model to identify this feature engineering. Of course, we removed multiple prepositions, converted this plural to singular verbs. I think we removed abusive languages as well because people write anything. And then we ended up in having a meaningful words. That's what we said, text mining. We identified a person who is happy, is talking about rewards, loyalty, customer experience, and multiple other things. But then people who gave the score from 1 to 6, they were talking about competition. They were talking about customer experience. They were talking about bad experience in the fraud last month, and many more. Now, this 3 data combined, then dissecting into an area and then multiple geographies, that will be able to help you to identify one product of the bank might be successful in one of the area and it's not in other area, and then identifies what are the actions to be taken. So that's where you will be able to use this kind of a technology to identify the business and what kind of input they need to do to enable their touch points of the customer. Right? So that was one of the supervised example. Let me go ahead. Now, this is where the slide, little busy slide, bear with me some time. What I have done is, why I choose this slide is, I talk about supervised, not necessarily something needs to be done, but unsupervised is one of my favorite algorithm type as well, and we use it very frequently. And that's why I thought, when you don't know anything about data, you have multiple things to do. So there are four types of algorithm, I would say, commonly used for the unsupervised algorithms: clustering, anomaly detection, dimension reduction, and association rules. Now, definitely you start with some kind of a segmentation. You would want to identify the different policy holders according to the risk and profitability disclosures, the type of claims coming up. You will use any of the clustering method. And of course, this is just the illustrative list, guys. Folks, you might have some different models or methods as well. But these were the standard or the most used one, what we have seen. Where apart from segmentation, you are looking for some kind of a outlier, some kind of a suspicious behavior, some fraudulent or suspicious transactions. That's when you would go with the anomaly detection kind of a cluster. And my favorite is isolation forest. That's where it gives you the good results as compared to others. Now, when you have scenarios where there are multiple dimensions, you definitely use PCAs and ICAs for reducing your dimensions, specifically used for computer vision use cases and high dimensional use cases. And association rules. Now, here is where I would say mostly the applicable use are, which are active one. Now, when you look from the business, and if you ask any stakeholder in the who is in the business team, see, they will look at the firm from the three angles. One is the customer revenue generation or top line increase. Second is the bottom line uh, improvement in losses or savings. And third is a risk management. This will be the three high level area where anybody would be working on it. And if you talk about the cross sell, upsell, getting more customer business, that's where this association rule will come up. This will actually help you to identify what suits better to customer than what we need to sell to the customer, right? I mean, customer might want to have a personal loan right now, one customer. Second customer might need a credit card right now. A third customer needs a home loan. Now that's the customer priority of C1 to P1, P2, P3, P4. That's like one angle to it. If you look at from the bank angle or the firm angle, they would want to sell credit card business this year, or they would want to have a home loan this year, or maybe the education loan this year, and they'll sell only this product. Now that means is they'll say P1. For a P1, identify all the customers, C1, C2, C3, C4, C5. Now actually, for a next best action for a particular customer, when we say in analytics world, segmentation of n equals to 1, you have to combine these both the results, and that's where your product propensity and customer propensity gets merged. It comes with the next best action, saying for this particular customer which product is beneficial, so that his interest or her interest would be fulfilled, and in turn even the firm gets benefited out of it. So that's where you will use association rules, and it can be used in multiple combination of the health claims and multiple things as well, right? So these were the four categories commonly used for by applications of unsupervised learning, from supervised and unsupervised. And reinforcement, anyways, it's just the learning and feedback to improve your results in the live environment. Let me take a pause. Next I have is to go into detail on the banking use case and the marketing use cases. Any questions so far? Or we take the question at the end?
Guys, if you have any question, feel free to write.
Okay, I'll continue for now. You can buzz me if you have any questions. Now, this was about the use cases in business analytics and algorithms. Let me deep dive into a banking life cycle for the audience who are or who have some kind of a knowledge in banking. They might understand this better. Otherwise, other audience, other people on the meeting right now, uh, I'll try to avoid the acronyms, use of acronyms, so that it will be better for everyone. Now, when I say a banking life cycle, and I need to use some kind of a use cases to actually have advanced analytics usage in the decision making. This is where I come from, right? From the customer angle, from the bank angle, I say I need the typical life cycle would have the acquiring the customer. Then after acquiring, I have to retain, I have to maintain my portfolio, and then I need to grow. I need to have more products and more services to the customer, so that there will be more of a wallet share from the customer. So it's a typical life cycle of a customer from the banking business. I would say acquire, retain, and grow. And on the same basis, we'll have a banking value chain as well in the next slide. But then this is where the high level cycle would be. And what I have done is I have charted some of the use cases in this cycle uh, to actually get the benefit out of this. Now, when I say acquiring the customer, now marketing and sales will go hand in hand. And it can start from the channel, saying which channel I need to reach customer, whether it will be physical customers coming from my ATM or a branch, in-person visits, or I am visiting the customer, or it will be digital. They coming to my banks and websites, or emails, WhatsApps, SMSs, social media, anything. Right now, these are different touch points. Apart from the call center as well, they can even call and ask for any services. They can talk to converse with chatbots. The idea is that when you start have a digital footprint, you use the use case from the business point of view would be to have number of footprints more. How do I get my more funnel, what you call, in the website coming up, if they are interested after coming to my website or a mobile app? How do I make sure that whatever they are getting, they will be able to get the information, or at least I'll be able to nudge them. That's where the clickstream analytics comes into play. And then all this kind of a customer coming to the website, going to multiple menus and dropping off, all those things you need to give them a chance of saying, how do I nurture the lead? Whether like I have a, and then you divide between the hot, warm, and cold customers or prospects. And that's where lead nurturing piece comes in. You score the lead, and then you pass it into the call center or the sales team to identify where they have come from. Then you do channel analytics to say which is the most channel. Either you call directly on a real-time basis, or it can be a offline message, or it can be RM talking to a prospect, or XYZ. So from the digital analytics to footprint to lead conversion to lead nurturing, your agent performance analytics, which channel to reach out to. Sometimes you might have a partners. There can be aggregators in business. Some demand, you might be having a offers, right? Uh, you go to demand, and there will be offer on saying SDFC. You swipe SDFC card, credit card, you'll get 5% discount, and with other banks as well, 10% discounts. Those are the large acquisition, or getting you to swipe their cards. But then those are the different businesses, how you attract to make sure that those cards are getting utilized with the proper utilization as well. Now that's where the sales and marketing comes into play through different channels. Definitely there will be budgeting and actual forecast as well, which will come, and the customer product affinity. Now this is where your affinity to use a particular product or a card. uh, See, nowadays there's a UPI and cash transaction app are happening. Now you might be having 3 or 4 bank card. Which card you will be using most will be decided on multiple things, on your comfort, your experience in the past, your maybe the discounts are having on a particular scheme card. So that way, how do I make sure that people are having a product affinity? I'm mainly coming from the experience point of view. Let's say once they are customer, you acquire the customer. Now, definitely, if I'm talking about the bank, the current account, saving account, fixed deposit, term deposit, everything is a liability book part of it. But when you come to asset part of it, applying credit cards, applying loans, you need to do some more analysis as well. You need to have a alternate credit decisioning check saying this XYZ prospect has asked for a 2 crore loan. Will I be able? Will he or she be able to repay it on time? And then there will be credit check going on. The set based on your assets, your form 16 and everything. I might even give you pre-approved loan as well from the credit checks analysis. From application risk scorecards, I can even convert the risk scorecard saying uh, apart from 2 crore, if the more loan is given, there will be a risk to the firm, because hey, the bureau scorecard says he has outstanding loan of 10 crore in 5 banks. So even those kind of credit checks, the early warning signal. Now, once the borrower is there in the bank, I keep on monitoring the portfolio, saying is my payments are coming on time, it's my transactions happening on the account are happening correctly, is there any fraudulent suspicious transaction I am seeing. So those kind of use cases is all about having a risk assessment and doing a portfolio monitoring from the risk angle and the asset products in pipeline in working. Now, let's say everything is going good, and the next cycle comes is the customer service. How do I make sure that I need to learn about the customer 360? Now, customer 360, folks, you can have a customer segmentation even with 5 parameters: first address, email address, bank communication, and salary account and transactions. And it can be customer 360 can be arrived in using 100 parameters as well on introducing multiple things. So that way, never the customer 360 will be enough. It just basically add the data in the meaningful way to have the entire portfolio written, so that for a retail customer to a household, how do I make sure that the banking needs of a customer from the household, uh, siblings, spouses, parents, children, everyone uses the same bank, and that's where you impress them. You make sure that they are satisfied, their loyalty is good towards the bank, their sentiment analysis is good. That's what the customer analytics will be done. And see, customer churn. Now, in my understanding, see, customer churn is not that you have closed the account. There's definitely a churn for sure, 0 or 1. But then, let's say, for example, one customer has been using his credit card for last 5 years and swiping around 50, 60,000 on a year for in an average. Now, this year, that customer has just swiped for 20,000. Even that is a churn, because now 40,000 of that revenue would have gone to a different competition. Now, if he or she has a bank account with the firm, boom, you have another fortune to identify where the amounts are going, where the spend behavior is happening. And you can even talk to customers, you can touch point, and you identify what can be done, and you can provide more schemes. So all this customer servicing is what comes into this bucket, and then definitely having the next best offer in the next cycle. So this is how basically I would see a banking life cycle from the customer angle, and then various stages of uh, we having the front end, back end, and the front office transformation. I have one more slide from banking, but I think it would be too much to show or go in detail. At least I can just skim through it. What done is I've further divided these 3 stages into 5, saying when you say acquire, it's actually acquisition and fulfillment, because the credit line has to be approved and everything has to be done. Then from the retain side, you need to have a customer account management, servicing as well, and then in the grow you have a relationship growth. The color code what you see here are going from loans to deposits. Blue color indicates they having both the products or the use cases. Black is only loans, and gray is only deposits. Now, the one word you see bold here, that itself is an entire project. That doesn't necessarily mean that they have a one use case. It can be a combination of 1 or 10 models in the backend, or it can be a combination of report and dashboard combining the data to give some kind of insights. But definitely there will be AI ML involved to have this, what I call augmented analytics, so that my capabilities can help build stronger customer relationships and improve acquisitions all throughout the life. So that's what I had from the banking side. I mean, of course, this is just an example of retail banking. We can have a same example of corporate banking, treasury business, digital banking. There can be abuse of risk department, finance department, operations department, and then the stages, this use cases will differ from the banking industry perspective. But let me take another hold here. It's 5:39 on the clock. I have 2 more points to cover, but then any questions so far? Yes, I have one question. Yes, sir, kindly comment on customer profitability index in terms of claims and premium received in general insurance, particularly related to data. Customer profitability index. Uh, uh, See, I can have one answer, but then I have not worked in detail for general insurance, so to say. Auto insurance, what I have worked for one of the client, so I don't think I'll be able to do justice to the question. But then when you say customer profitability index, see, customer of a particular policy would be just make sure that I am getting my amount of the claim, because I've taken a policy of the auto loan, for example, and my, let's say it is this accident, I just expect that whatever expenses I have to bear, it will be fulfilled. Now, if you say customer profitability index, I would say customer satisfaction index, I would say, because from when you take a claim, there's no exactly a profitability you are looking. I mean, when you're looking for a profitability, it might be going to the investment product, not the insurance product. So maybe, and to the GI world, it's always the policy where you'll be able to meet in uncertain circumstances, right? So that's what I understand. Not sure if I've answered that correctly, but yeah, that's a GI world. I might not have detailed answer. Okay, how can you predict? Now, see, again, now when you say prediction, there will be multiple but uncertainty for what? See, there are multiple scenarios of whether your claim will be passed or not. In talk about in the terms of GI, it can be your a glass insurance, it can be your mobile insurance, it can be your auto insurance. There are multiple CD, right? Consumer durable. Everything will be GI. Now, that's where the uncertainty will lie in your terms and business, your 50 pages document you sign up saying which all conditions I'll not be able to claim 100%. So that's where I think you need to identify. And see, prediction is just basically how much percentage of either a surrender value or the claim value you'll be able to get. But from the, if you're talking about it from the firm side, there are multiple things, because end of a day, from the insurance firm side, how many claims I need to pass. I mean, out of on an average of 1,000 customers, maybe 5 or 10 people are claiming it. So I'm not paying to the other part of the customers who are not claiming it. Again, customer portfolio would be again divided between your retail loans versus the corporate loans, or maybe not the loans. Sorry. Yeah. Could you share about the platforms where these algorithms are implemented, or GUI which? Okay. Oh, definitely. So see, and real time as well. Now talking about the platforms, different client will have a different environment. Now, where I'm working with all my client partners, One client have a SaaS, entire SaaS suite. So they will work on SaaS minor and the entire SaaS suite. Other client are having Azure. So then there are two options, either to use for Azure AML or Databricks to write your algorithms. If you are in AWS, you do for SageMaker. And then, of course, when I say SageMaker or Databricks, it's just not one technology you need to use. When you use, for example, AWS, you use SageMaker. There's a ecosystem of AWS you need to use. You need to have the data coming in S3. You need to schedule using Airflow and NiFi for orchestration. You need to have your GitHub's setup available, your MLOps to be available. So that way, when you go to one of the ecosystem, although one technology will be there where you will be writing either in Python or Java or a Spark, PySpark, but then you need to adopt that entire ecosystem, and otherwise you'll not be able to have your fruitful intelligence to the model output. These are from the cloud perspective. If I'm talking about the on-prem, then it might be a standalone Python installation on the server. It can be RStudio, our enterprise license, or it can be Oracle suite as well for mining. And then end of the day, statistical anyway, SaaS is the good one. So those are the technologies that what I could see are used. And when you talk about, see, real time, when you say real time, now real time again, there's nothing to do with the model. Your model has to be in a level where I be able to trigger in any way. What I consider real time is event driven. Whenever event happens, I should be able to trigger my model. And it can happen on overnight, it can happen on intraday, or it can happen real time. For example, application of a scorecard. Now, this is something my credit card application has come up, or the loan application has come up. I need to identify the scorecard. I trigger it, and the model runs the data across the ecosystem and identifies the all the data points of the credits, the defaults, the loans ongoing, the salary budget, and maybe the next 5 years prediction. Everything is done, and then they come up with the scorecard to say, this is where I can approve the loan. Now, that's the real time kind of a use cases I would be able to see as well. I would say event driven. The real time would be to even learn from the social media and maybe real time chatbots. You have a response, automatic response time to the customer comments. Those are real time. My fraudulent transaction to stop sometimes, and I have noticed this. I don't know how many of you have noticed it. Whenever you do some new transaction, last month I did a swipe of almost like 1 lakh on my Citibank credit card, and they called me instantly saying, are you the one who is doing this transaction, right? This basically the model have identified this anomaly behavior or abnormal behavior on my transaction pattern from last 5 years, and it triggered the call center call to me. Now that's the application of the real-time use case of identifying anomalous transactions on real time. So that can be one of the real-time use case I can think about, and there are many more. Okay, thank you. Okay, let me go further. See, quickly, right? 547. Now, when you talk about marketing, the entire marketing gamut, how do I do effective marketing? Let me talk about something in the of saying how do I increase the customer value in the next normal? I call it anyway next normal. We are saying, but it's anyway new normal in English. So let's look at some of the patterns what we have seen in the current era, right? What I've seen is customer buying patterns have changed. Even personally, when I buy, I go to more comparison sites to look for availability. As per the report, it says 49%. I switched to buying product online. Even I used to go to DMart. Now I am used to buying things online. Survey says 52% of people who are doing that, and there are multiple buying patterns have changed. Apart from that, the digital era, what we are calling this is a digital era, and there are multiple facts around it, right? One of the reports says that data consumption per person It is 12 GB right now in current year, and is expected to be doubled by 25 GB in 2025. Now that is where the consumption is happening. This can be also prevalent from number of cashless transaction happening. If you see 2014 per customer, we were having only 2 transactions or 2.38 on an average. In 14, 6 years, 2020, it was 22, almost 10 times jump. And just look at one more year, 2021, we have 38.48. Now, these are the 38 cashless transactions happening per person as per the survey or statistics. If I look at UPIs, now every time you go to the normal store or paying a cab or everyone you use UPI, we clocked 7.3 billion transactions, which are worth 12.11 trillion INR in last month, October 2022. But hold on, now we keep saying the digital era. Is this the same for rural and urban? Where is urban? Is there a divide between those two areas? There would be, because the smart connection, internet connection, smartphones, handsets, laptops. If you really see, as per one of the survey, there are 98 handsets available and handset doing anything, right? Per 100 people in urban, but whereas it is rural, it was only 33. So that way, we still have digital, complete digital to go. It will be always digital. Where digital is happening, you can go digital. Otherwise, physical will be the channel going forward as well. Now, once we see these are the market numbers or the observation we see happening around, I have seen some kind of a break in supply chain as well with a user, me as a customer, also happening on my consumption. I've seen longer queues in store. I've seen product not available always. Whenever I go for it, it's not available. Longer delivery times online. Previously, we used to get like 1 hour, 2 hour delivery. Now we are not getting it. End of a day, unfriendly customer advice. And I would say my experience to all the touch points are not similar. So that's kind of breaking in my supply chain as well, losing trust from the customer side. And now with this kind of a background, and there can be more, how does a firm, or what are the challenges they are looking up? If I look at there from the firm angle, from bank angle, insurance angle, is see understanding the customer expectation. They are so much worried. Uh, how would you know that what does customer want? Because end of a day, all the viewpoints, they have become very much choosy on saying what they want to do. So that would be difficult for me to answer. Now reaching out to customer, end of a day, say there can be telephone, there can be email, SMS, WhatsApp, all the channels are there. But then if you really look at one channel at a time, there's a telephone, you can have a voice recording to understand the customer. Uh, but it's just a voice without any sentiment or facial expressions. If you read the chats, emails, SMSs, WhatsApps, it would be opinions with no tone. And now if you go to the social media, there will be definitely expressions, opinions, but then those are for the public sentiments, but might not be the real expectation as well. So then what would be the good channel to reach out customer? I would say all, maybe the face-to-face communication or a voice call or a video call, maybe through RM are the channels to go for. And exceeding customer expectations. See, I would say, so there are 5 customer expectations which have risen, right? One is speed, consistency, friendliness, convenience, and human touch. This human touch is very important, guys. Why do you think the Kirana stores are still valid? I mean, there are marts available and everything is there, but Kirana stores are still surviving because they know the customer knows. And that's what's happening, helping them to have their customer experience. End of a day, firms are also facing challenge in employing the skilled professionals. Now, who are the touch points of the customer? If they are not happy and they are not empowered, even they'll not be able to meet the customer needs. And last is how as a firm I should do a customer first culture. While we have seen this kind of a challenges in the firm, the way to go about this for a firm and generate more opportunities, I would say this is what firm need to do, is to have a 3-step process. Uh, Whatever the supply chain was broken, we have seen in the last slide, repair it and make it stable. Rethink, saying what you need to do. Think about your customers. Are you targeting your millennials? Are you targeting your Gen Z? Are you targeting somebody else? What is your target segment? And then reinvent for those segments. Have a meaningful segment instead of doing for masses. That would be more of a quality work than the quantity work. And then these 5 items I have mentioned it. Again, customized meaningful segment. How do I apply more on digital analytics? Now, very important. CMO, Chief Marketing Officer. Now, there should be an interconnected marketing strategy with a CTO, Chief Technology Officer, CIO, with risk CRO, with CFO, so that everybody is working on the same objective to drive the real growth. And we just saw the customer-oriented perspective. For a firm to be successful, there should be an employee-first culture as well. And there's statistics that wherever the employees are happy, the customers are happy as well. So there should be focus on both employee centricity and the customer centricity. Empathy. Now, this is very much important. I gave you example of the Kirana store. This empathy, while you are designing something on a simulation, put yourself into body and the mind of an end user, so that the experience will come in to the actual outcome. And to top it all, there should be what we call MarTech, the data technology available for marketing technology. It should connect all the data points across the various touch points and input and output, so that my seamless customer journey can be established. So this was I thought from the effective marketing we should be doing this. And what I have seen the trends for digital marketing going forward, empathy. I talked about the and you know what, empathy can actually lead to innovation as well. You might not be doing XYZ things in the past that you would start. Metaverse, very important. This is a trend going on right now for many luxury brands, in retail, and even I've seen in furniture world, where you actually get to experience what you're going to buy. Go to the furniture store, they'll be able to show you on VR, saying this is how your room will be looking like. So those marketings are getting very much in demand. And ESG, environmental social governance, believe me guys, uh, this people are actually taking care or going after the firm who are advocating this nature policies. If they are inclusive of the all the workers, and if they are transparent to show what they are doing in the past. So company, specifically Gen Z or millennials, the young people, they are particularly promoting or only buying the products who are following the ESG as well, to make sure that even the ambience or the is also available from the social needs as well. Right. So this is what I could say from the digital marketing, or how do we generate customer value in the next normal world as well. Any any questions so far? Chat. Can you predict another technology disruption? See, technology can change and can come and go. I don't think technology, it would be the pattern detection as well. And these are the 3 main factors, what I would say would help in improvising the customer, your supply chain correctly. Otherwise, technology can be anything, right? It can be a drone. The drone delivery is not started in India yet. It can be a new technology trend as well, delivering through drones and happening many things through drones, but maybe little more time. Your currency exchanges, RBI has got CBDC, at least for the interbank transactions. Maybe that is one of the lookout. The exchange of digital currency might be coming into picture as well. There can be a new supply chain efficiency into that. Definitely. See, in fact, even in our firm, right, when you said it's a technology enabled business always, I cannot think about any business who doesn't use technology. And that's where, see, I mean, see AI and data, when I started, it goes hand in hand, right? One of the study from Gartner says by 2025, in next 3 years, we expect the organization to shift their focus from big data. Now, big data is definitely, this is a term at least running from last 2 decades for sure, or at least 1 decade, to say I need to have everything. But then instead of getting everything by a volume, why don't I look at as the small cares area and then have a depth in it, right? So maybe a small data and a wide data with more of a parameters. That would be a trend coming up, is what Gartner is saying, and then that would make AI less data hungry in terms of the volume, where I definitely it needs to learn. And I would like to conclude uh, by this phrase. Of course, this phrase is not new. 2000, I think, 17, it was published in The Economist. The world's most valuable resource is no longer oil, but data. Data is definitely valuable, but then how do you massage it, create insight out of it so that you can generate actionable values as well? And when these three happens in sequence, that's when I'd say you will create money. Your insights are the money, and that's why it helps you to get data monetization. So data is definitely a raw form of money if you know how to extract it. Let me take a pause here and see if there are more questions. This was my last slide, and open to any further questions.
Wonderful, Samir. So I have a couple of questions.
Sure.
So thank you so much, like summarizing this such a broad spectrum and such a complex financial service life cycle, specifically from DAS and advanced analytics and ML perspective. And I really liked this autopilot mode and the guided mode stuff. So I have a few things which perhaps I can take a freedom to ask on the behalf of thousands of career aspirants. So can you really highlight one or two or top two, three use cases which perhaps while these folks they are studying in university, they can really get hands-on so that they can really improve their job prospects when they graduate.
Okay. I would definitely say segmentation is definitely a basic expectation. Nobody believes or explains saying how do we do segmentation. And then once you do that, in my belief, it can be used for multiple usage. Once you have a customer segmentation done, it can be used for a risk angle. It can be looked at from the selling angle. It can be looking from the customer satisfaction angle. So that way, the customer segmentation or a profiling, I would say, is one that every data scientist should definitely be knowing, saying all the types of segmentation. Whether you have labels available, it's supervised. If you don't have a label available, go for unsupervised.
Right.
So
would you mind illustrating some of the example of segmentation within the bank?
Oh, definitely. So okay. So when you start with the segmentation, Bhupesh and everyone, the idea is it can be, and again, after you write the model, you depend like a clustering model. End of a day, you would go with the region, demographics, geography. In fact, the pin code analysis is very much important. What we have identified from the data, from the age factor of the customer, from the tenure of a customer, from the salary of the customer, transaction of a customer, products and services, whether the customer has how many products, CA account, CASA, liability, FD, how many loan accounts. Now the question is, if the customer has it, does his or her spouse has it? What about the children? What about the parents? What kind of
Wonderful.
policies they would be having? And then kind of entire banking system will come into play saying, this is my customer segmentation. Now, when I say customer segmentation, it also means customer household. And I would be the track KPI to be track is how many customer product, if a bank has a 35 products of a suite or let's say 20 services, how many of these 35 products a customer has?
Wonderful.
Now that can be one of the segment. The second segment can be after opening the account, what is my initial payment? Because a lot of times this RMs, they just make sure that customer to just open the account, but they don't use it. So actual efficacy of if the accounts are really active or not. So maybe initial payment, what we call IP, initial payment or the second payment. What is the average monthly balance of a customer? What is the average tenure? Number of checks used, number of checks bounced. And I
So
mean that can be like
these are hundreds of features they can really use to create the segmentation model. My another question, follow-up question on perhaps on top of this, like how frequently, because most of the banks, most of the financial institutions, they already have done the segmentation, and now they have already classified their customers into various buckets. How frequently they do the segmentation, resegmentation, and
so I
create
would
the
say there is one
classification
team.
bucket?
There is one team who always does his segmentations and improve the score, and there is one team who goes and actually use it. Now, definitely to the marketing team who's executing the campaign, for them it's only a snapshot. But then I would say minimum of monthly, if not weekly, or more. That definitely is the time where segment gets changed. By next month, the targets are being put up to the RMs, to the sales executive, by at least minimum monthly for sure,
Wonderful, wonderful.
if not fortnightly or weekly.
Okay, so there is another thing which a lot of students they ask is auto ML is exponentially growing. Right, one end students are trying to really acquire skills to become business analysts, data scientists, ML engineer. And the other end, data robots, Microsoft, they all are investing billions of dollars to really grow this auto ML. So an auto ML can really do every stuff, find out the right kind of algorithm, do everything what data scientists are supposed to do. Where do you really see the future of data scientists in this auto ML world, or ML engineer for that matter?
See, application of auto ML, Bhupesh, it will go and hit sector by sector.
Right.
So applicability of what I call displacement of jobs would definitely vary across the sectors. It might come into the manufacturing world first, and maybe retail, and then maybe FS and other industry. But then when coming from a data scientist lens, I would say human and machine will always be working together, because because end of the day, who will train machine? We keep telling is autonomous, and of course there are applications live as well coming autonomous car. But then you know what? Even for Tesla, every mile a customer drives, or we as a customer drives, that goes into learning of a model. So let's say no customer is driving a car. How would a machine learn?
Right.
So I don't think there is an end of human being or human touch, and so autonomous world is there. So there will be definitely something which are going to be autonomous, but then it would just it will add in the customer decisions. Like a simple example, right? Your Google, you're writing the email, and some of the words directly comes to the while writing the email. That's just the automation or autonomous, right? But then how it is saving? It is saving by 5 seconds. Is it really is going to replace my email writing? Might be, might not be.
Great. No, in fact, like the explainability, specifically in the financial service sector, you're not going to really just buy the decision that, okay, invest in Hiran and Nani because your deep learning model is saying, right?
Correct.
So investor would like to really hear what is the rationale behind that. Can you really decode the algorithm and show me in mathematical simple fashion?
That's a very important point. When you say we have two terms called explainable AI and a responsible AI.
Right.
Now,
Right.
those are the two things we are right now working on with multiple clients, because whatever AI is giving output is not even understood by the humans. So how do I even
Right.
apply for it? And then directly we go for again the reports and dashboards. So yeah.
So since you work closely with various financial institutions, what is the state on the ground? Are these, so you have three kind of stuff. You have rule-based models for risk, you have ML-based models, and now here is a new boy in the field, which is DL, right? So uh, still are the financial institutions still parallelly considering rule-based models vis-a-vis ML and deep learning models? Where is the
I would
state?
say the inclination towards the ML model is going in advance. The
Okay.
legacy is still on the rule base.
Mm,
I would say the world maybe 5 years back it was maybe 90-10 or 80-20.
right.
Today, people definitely have a parallel team, one team supporting the old models, but the new models are getting written into ML for sure.
Okay.
So that
Okay.
ratio would have changed to 60-40. And I would say it would definitely go to 40-60, but not less, if not 50-50. Saying rules are there, but then rules will become supervised model, because even we want to tune the rules, because the
Right.
thresholds, I want to change the threshold. Now, without the model or machine telling me, you know what, boss, so your thresholds are all absolute. So even
Right.
you need those changing the threshold as well, changing the rules as well, you need machine learning. So that
Great.
way your rules will be changed by a feedback mechanism, by a supervised or reinforced learning. But there will be always a BR. I don't think we'll be able to replace BRE or a CEP, what we call complex event processing and BRE, but it will ML will definitely add up to the intelligence what it brings.
Okay. Great. Great. So you could see there are a lot of students, right? So what are the top 5 skills or top say 10 skills which comes to your mind, which any career aspirant who want to move into BFSI sector need to acquire? These are the must core 5, and these are the say additional 5 skills they need to really have. Can you
Understood.
do any kind of recommendation?
See, from the technology side, it is definitely PySpark. Of course, you would know Python, but then how it will
Right.
be utilized in the Spark cluster, Spark environment. Python and PySpark is one.
Hmm,
Uh,
hmm.
One of the skill set which I think everybody should be understanding without the sector or respective of the sector they work in is SQL, because
Hmm.
without SQL understanding, even if you are good in Python, you'll not be able to crack the data
So
structures.
all the data is still the lying in the SQL, even though the big data, Hadoop and Spark we're talking about. The
Correct. Even big
reality
data
is
gets
the
converted into a
yes,
correct.
yes,
Yeah, yeah.
yes.
So SQL, PySpark, I would say, and once you understand PySpark, then maybe you can choose the platform. Now you can apply at least the cloud manage angle to it, saying I want to have a AWS PySpark SageMaker as one,
Right,
or I want to go for Azure and I want to learn either Databricks or Azure AML, or maybe
right.
a SaaS. A lot of people are also doing a SaaS, but personally, I would not ask somebody to learn SaaS, because legacy will be SaaS. I don't know future may we have a SaaS or not. So, but yeah,
Yeah, SaaS
SaaS
is
is my
losing
sense.
its grip. Like I remember 12 and 13, the SaaS was on the peak, and 15 it was a R, and then 17 and 18 Python is started growing, and still Python is leader.
Correct,
And
correct.
let's see who wins the race next.
So SaaS, which definitely will not be replaced, because what I see, right? The SaaS, E-minor, the entire SaaS suite, DG and all, it who people who are SaaS savvy, they are still getting uncomfortable in the ML world, because then there is no UI available, everything is in the back end. So that way it will take some more time, maybe a decade more, to replace SaaS entirely, unless these other platforms are coming up with the nice UI. Otherwise, when you use SaaS, people who have used SaaS, I mean, it draws the entire flow beautifully. I mean, even the non data scientists will be able to understand the entire code. So that
But SaaS
way,
is primarily with these large, big fat banks, those who have lots of money in their pocket. But new age fintech companies, they all are on the Python.
Python definitely. I think Python on cloud, Python on big data, PySpark. Those are the and Java on Spark for sure.
Right.
Are the technology I would say people should be knowing. And then If you have a interest about the particular sector, I would say start learning about the domain. There will be banking 101 sessions, there will be insurance 101 sessions, there will be NBFCs, private equities, mutual funds. Learn about the domain. In the real world, you will always have a domain expert in the team to support you or add into you. But then you knowing business will help you to talk in that language. For me to talk
You
to a
need to pick up
banker,
those lingos.
correct. Those AQB, AMB is a very common word in banking. But if you don't have not heard what is average quarterly balance and monthly balance, the people might be saying, "Acha, theek hai, chalo," they will talk to somebody else. So pick up those lingos, I would say, for the sector people who are interested.
Wonderful. Thank you. Thank you, Samir. Thank you so much for your these valuable insight. And we hope to have another round of session wherein we can really take a deep dive. Right. Really appreciate your time, valuable time, and such a wonderful insight. Thank you so much, Samir, and thank you so much for all the audiences. If you have any question, please write. We can really take 1 or 2 questions before we depart.
What is the best part to get forecasting? See, Shubham, the point is,
yeah, please, Samir.
Okay. See, when you say forecasting, right? Let's say you are planning something, and if you don't forecast, you will not have some kind of a range. The forecasting will help you to give some kind of a range, and then you can have a plus one minus range as a threshold to say I want to reach here. The way I understand in my world is forecasting is like a plan. You forecast for it, and then you actually measure it. Whether are you going for a plan or not? How much are you deviating from the current plan? And then even you change focus as well, year on year, YOY, MOM, QOQ, depending on the frequency you want to help. So forecasting definitely helps. And in this world, we'll say prediction. So that's what I would say, the forecast or the prediction. Forecast means say in the rule world, in the machine world, we say prediction.
Wonderful. Thank you. Thank you, Samir. And I think somebody has asked whether you'll get the certification or not. Once this session is finished, maybe within half an hour or 1 hour, your certification will be active on your dashboard to download. So you can download that digital certificate. Now, we already conduct a lot of conferences, meetups on this area to help you to gain domain and connect with the expert. Last month, we did one conference on fintech, AI, data science, and fintech. So you can really go on YouTube channel and can watch the various panel discussions and other stuff on fintech. 25th of this month, we are organizing one AI and data science in insurance. Do register for that if you're interested in that area, and do visit MUNI campus/events, and you will find various career events which you can really enroll for, right? So thank you everybody. Thank you, Samir, for your valuable insight, and let's hope to really meet sometime in physical world. Thank you.
Definitely.
Thank you, everybody.
Thank you, Aegis, Data Science, and everyone for listening.